Hey everyone, it's Calvin. Thanks for checking in today's video. I have a few minutes here, so let me do a quick update. Today's Thursday, May 2nd, 2013. Let's look at the SPY. It looks like we're still consolidating on this range, guys. If I zoom it in a little bit, you can see once we close back above this big red bar. I always mention big red bars as a big reference point, and so once we close above that, that was it wipes away a lot of bearishness. I said that several videos ago. You guys want to scroll back to hands up time. It's really simple. Go back to 4:15 when I did a video, and around those videos I mentioned if we do. More like 422, so around April 22nd, where I mentioned if once we close back above this red bar, it wipes away a lot of bearishness, and guess what? Now it's acting as support. See how resistance becomes support? That's what market's been holding. That's what we held yesterday's intraday low, which is also a gap fill. So it is consolidating on that level, looking to move higher. Okay, but the volume is a little light on this move up, but nonetheless, it is the pattern on the daily chart. Okay, it's still holding up this upper range, still holding the 25% retracement. Sorry, 25% retracement from this up move. Okay, guys. Let's look at intraday really quick. I saw this yesterday, but I failed to mention it. All you Elliott wave traders, the theory is that markets will move in waves. And in this instance, this is a 1, 2, 3, 4, 5, which is also 3 pivots to a low. So that's the reason why you could potentially why you had a low. I called that. I missed that yesterday. I saw it, but I failed to mention it yesterday. So that's why you're perhaps getting a nice bounce today. Here it is again: 1, 2, 3, 4, and 5, and then the fifth. Wave is usually the bottom, according to the Elliott wave theory. Let's go to the next chart. Let's go to Apple. Apple's holding up very well here. Didn't necessarily set up for a nice long play, so there was nothing really to do here, but it is holding above the 50 moving average. But I do believe it will stall out right around just general vicinity, and it should get a pullback from there at around the 455. Let's look at the weekly chart. I'm pretty sure there's some moving averages. Yeah, right there, the 20-week moving average. So that just adds more conviction to it right there, around the 457, 50-ish area with this trend line. So that's where I tend to believe it will stall out. That's Apple. Amazon got a little bounce today, but to me it's hanging in there off that trend line. It did hit the 50-week moving average, so I'm not surprised it finds some support here, and now just making kind of a falling wedge. Let's see where it goes from here. Not much to do here. We did try to attack back above the 200 moving average. It did close back above it. Let's see if we get back above it. Now, a lot of times, trick a lot of traders closing above it. It closed back above, closed below, back above, back below. So there's no confirmation here, and it's kind of barely closing back above here. So on Amazon, not much to do there. Let's look at price line. Price line. When you see charts right away and you kind of already get like a reaction immediately, you kind of already think it's gonna bounce. And you can see from my last video, just off this, not enough factors for me to trade it, but you got a nice little sideways action here off this up move, and sure enough, you got a nice green bar today, testing this trend line, and also right around this gap fill area. So check my last video out. I called that might be a bounce there, but not what I trade. So I didn't take that position. Let's go to let's look at the GLD. GLD is an intriguing chart. Right now, it is in a down move and with sideways consolidation. So you can categorize this as a bear flag. But what I don't like right now, if you're bearish, that is it is making sideways action off this 20 moving average. Okay, so it is consolidating below it. So usually when you consolidate below moving average, you're building strength to bust through it. Okay, and you have support below with the 10. So it's kind of make or break right here. Let's see which way it wants to break. If it breaks higher, sure. If it wants to tag this is a nice spot to play the inside bar pattern. So this is one big red bar, inside bars, and you get a nice additional move down off this 50 moving average that's starting on a downtrend. On a weekly chart, you can see it as well. You also have the right. If this ends as a doji this week, that could be a sign that this could fail. This could make a move down. Okay, but you gotta look at the other time frames. Right now, we are closing back above the 200 moving average. We never confirmed below it. So if we close back above this week, above the 143.56, above this high of this last week's candle, if we close back above it, that'll be confirmation above the 200 moving average, okay, on a weekly chart, and that means that it will be support on the way down. So we have to watch for that. So we have to pretty much watch every week as it goes on a weekly print and just see how it all plays out. Let's take a quick look at the monthly chart. Monthly charts, it's tough to go short because you're right at support here at the weekly moving average and the monthly moving average. You see this is a big uptrend on gold on the GLD, and the first hit of it after a major uptrend, that's going to be solid support. Even pierced through it, so a lot of A lot of buyers supported it, and it's holding the 50-month moving average. Got to respect that. So right now to the downside, 137 should be support, as that is the rising 50-month moving average. Go back to the daily chart. You do have a time count coming in, so if you want to see it move down, it's got to start tomorrow. As soon as tomorrow, based off a time count, what I'm seeing, and we'll see how that plays out. And we're still failing to close above the 20 moving average. So yeah, we do have a bearish consolidation pattern in play, and let's see if it plays out. The measured move does take you roughly, let's see if I measured it out already. I'm not sure. Let's see if I have it, just an estimation about 120. Okay, and that does fulfill the target of the M top that we did make over here. If I stand correctly, we do have a M top that we made on gold, pretty much right here, huge 1 2 2, pretty much an M top right here. So the measured move does come out to roughly about 120-ish area, but I have to do more calculations to be more exact, but that's what I'm getting. Let's see if this even plays out. But the bigger pattern does say there's lower prices, so let's see if that plays out. Right now, if you were on the short side, any close back above, and the 20 is sloping down really hard, so it could be a good setup. But any close back above this high, perhaps, and above, or confirmation above the 20, you can stop out, and you can probably re-enter if it gets to the 50. Okay, guys. What else do I want to take a look at? Just want to do a quick update. Let's look at the IWM really quick. I don't believe I looked at that the last video. We got a nice big red bar yesterday. We're still inside it right here, so we have an inside day candle off this big red bar. So let's see if we could make a bearish pattern to go short on it. But right now, the trend actually on IWM, when I'm looking right now, I'm taking a quick look. It's showing much more weakness in the SPY, and that kind of gets me on red alert, because usually the IWM is the early indicator, because that's where the risky money goes. So that's a risky. That's where I get an early sign that maybe this market wants to roll over because of the moving averages. See how in the SPY you still have a strong, fairly strong uptrend with the moving averages. See, they're still trending up, but the IWM has a death cross in play with a bigger red bar than the SPY. So that kind of gets me on the word of caution. JPM is lagging the market. That's another red flag for me. We had a nice rally today in the markets, and barely, the JPM is barely up for the day. Okay, so you have to think once it broke $50, that's going to be pretty bearish for the stock. Okay, so I'm pretty bearish on Amazon at the moment. I'm sorry, JP Morgan. So not bearish, but I have more of a neutral to negative stance right now. But there are mixed messages in this market, but you just have to look at the leaders, okay, and what they're saying. JPM, the financials in general, and also the IWM. Okay, those are what I look at as early indicators of what this market is doing. But right now, give the benefit of the doubt of the buyers for the SPY. It is still trending up, and it's still building sideways consolidation. If we break this on our volume, and we start breaking this moving average, and then you could start looking at different scenarios. But right now, that's what I'm looking at, the SPY. I gotta take off, guys. Sorry, I had to make it quick. If I'm talking kind of quick, I'm kind of in a rush. So I will talk to you guys tomorrow. Hope you guys have a great day. See you later.